Hey everyone. Vertiv Holdings, which is a global provider of critical digital infrastructure and continuity solutions, reported quarterly financial results on July 24th, 2024. The company I had rated as a borderline buy coming into this investor update, I'm going to update that recommendation here in this video. I'm going to review the company's latest financial results, including where their revenue increased to, where their profits increased to, and how they're adapting to the growing effectiveness of artificial intelligence and how that's creating a surge in orders for its services. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Starting with second quarter orders, in 2024, organic orders increased by 57% compared to the second quarter of 2023, and they are up 37% on a trailing 12-month basis. Orders eventually turn into revenue when the company performs the service, so an increasing order count is great news for Vertiv stock investors. Net sales increased by 13% to $1.953 billion, and I want you to notice the difference here. Revenue only increased by 13%, but organic orders increased by 57%. So the orders are increasing the pipeline, and eventually they will turn into better revenue growth for Vertiv, which only increased revenue by 13% compared to 57% growth in organic orders. That's great news for accelerating revenue growth. Operating profit of $336 million was up by 63% compared to the same quarter last year. So already the company's profits are surging in regards to and in relation to rising sales. I love to see companies that have growing profits when revenue increases. Not every company experiences this. NVIDIA is the dominant AI player right now, and its profits are soaring along with rising revenue. Another example is Supermicro. Its revenue is increasing, but its operating profit margin is actually decreasing. So sometimes you have companies that deliver profit growth along with revenue growth, and sometimes you don't. The big difference is sometimes companies, in order to grow their revenue, they offer lower prices and they offer incentives to try and get more sales. And sometimes a company's organic demand is so strong that they can generate greater profit along with greater revenue. And that's the case with Vertiv. Its profits are growing along with growing revenue. So given the benefiting or given the better than expected results, the company is raising its 2024 net sales guidance to $7.665 billion at the midpoint, and that's $50 million higher than the previous guidance. It's also raising its 2024 operating profit guidance to $1.25 billion at the midpoint, and an anticipated improvement of 36% compared to the same year in 2023. And given the company's orders are growing faster than revenue, significantly faster than revenue, it's very likely that the company's profits in fiscal year 2025 will expand faster than their profits expanded in 2024. They're also raising their free cash flow guidance to $875 million at the midpoint, which is $50 million higher than they previously expected. Management saying that they delivered another strong performance in the quarter, with order growth again exceeding our expectations, rising 57% year over year and increasing 10% from the previous quarter. They say they continue to see increased scaling of AI deployment, and Vertiv has the capacity in place to seize this pivotal moment while continuing to invest in capacity for the future. So they have the capability to fill this soaring consumer demand right now, or business demand from its customers right now. And they're also investing in expansion so that they can meet these rising orders that are coming in. Vertiv is the connective tissue between IT and facilities in the data center, and we are just beginning to tap the tremendous potential of our unique position in the industry as we leverage the most complete portfolio of critical digital infrastructure solutions across the entire thermal and power technology spectrum. That's supported by over 3,750 field service engineers globally to help our customers navigate this increasingly complex environment. And from the companies I'm following in artificial intelligence, the area of significant growth is the AI data center build-out. Companies like Alphabet, Microsoft, Amazon, Facebook, and Meta platforms are spending tens of billions of dollars in increasing their AI capabilities, and Vertiv is in a great position to benefit in that industry. The company is forecasting third quarter revenue growth of 14% at the midpoint, with adjusted operating profit margins coming in at 19.6%. For the full year, the company is forecasting 13% revenue growth at the midpoint, with adjusted operating profit margin coming in at 18.7%. When I reviewed the company's previous quarterly earnings results, I highlighted that the company was very likely to increase their guidance for the full year in 2024, and they did precisely that when they updated investors here. It's reasonable to assume after the company reports their third quarter earnings results, if they come in as expected, they will again raise their 2024 guidance, especially with relation to operating profit margins. As you'll notice, their operating profit margins have come in so far year to date much better than the company is forecasting at 18.7%. In fact, in the next quarter, they're forecasting 19.6%, but for the full year, they're still forecasting 18.7%. So with companies that are growing as quickly as Vertiv Holdings is growing, I like to look at cash flow from operations, and they are growing this metric meaningfully as well. The company's cash flow from operations increased to $378 million in the 3 months which ended on June 30th. That was up from $253 million in the 3 months that ended June 30th, 2023. For the 6 months so far in 2024, the company's cash flow from operations has increased to $516 million, up from $295 million in the same time the prior year. So all the important metrics are moving in the right direction for Vertiv Holdings stock investors. Year to date in 2024, Vertiv Holdings stock price has been volatile, rising from a little over $45 per share to start the year, all the way up to over $100 per share, before falling back down closer to $65 per share, and then rising back up to $80 per share as I'm recording this video on August 14th. The stock is now trading at a forward price to earnings of 24.81, which is on the higher end of where this stock has traded for going back roughly 1 year, according to this metric. Now, I think it deserves a higher valuation multiple because of how the company is benefiting from the AI improvement, the AI cycle, and its growing orders, accelerating revenue growth, increasing profitability, all points to a company that should be valued at a premium valuation. I had Vertiv Holdings stock rated as a borderline buy when I last updated my viewers on May 27th, 2024. And following these excellent results, I'm upgrading Vertiv stock to a buy from a borderline buy, and I'm updating that recommendation today, August 14th, 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.